Hello and welcome to the Your Financial Pharmacist Real Estate Investing Podcast, a show all about empowering pharmacists to achieve financial freedom through real estate investing. I'm Nate Hedrick, and each week, my co-host David Bright and I explore stories from pharmacists all over the country who are achieving their real estate goals while maintaining a meaningful career in pharmacy. Whether you're a first-time investor or a seasoned pro, we're here to provide education and inspiration about the world of real estate. Please note, this podcast is intended for educational purposes only and should not be considered financial or investment advice. Hey, David, how's it going?
Hey, good, thanks. How you doing, man?
Good. I'm excited. We are bringing a really well-known guest on our episode this week, actually a YFP internal celebrity, Robert Lopez. So a certified financial planner, and I'm excited to have him on the show. It's a good one.
Yeah, I thought it was really timely with your episode too, because I know I just recently listened to the episode where Tim interviewed you and your wife on episode 262. So yeah, that was fun even to hear your story of like how a financial planner, because I know it's not always the most common for a financial planner to talk about real estate investing. And so that was really fun to hear that balance of, coming up with a debt-free plan, the other priorities of insurance and everything else that goes in, as well as real estate investing.
Yeah, if you want a look at my life and my life with Kristen, you can definitely take a listen to that. 262 was fun. It was cool to have Tim have me on the show for something not real estate related for a second. So that was fun. So that was a good experience. And again, it exemplifies what we wanted to bring Robert on for, is that they're not the typical financial planners. They do allow things like real estate to incorporate in. So it's a good fit. And so I really liked having Robert on the show to talk about how do you prioritize all the goals that we're trying to achieve, right? Paying off student loan debt or whatever debt you have, getting into real estate investing. How do you time that? How do you harmonize those priorities? And so again, brought on Robert Lopez, someone who is a certified financial planner himself, an investor, has worked with clients for years who are investors. So he knows it inside and out, and it was the right fit for this kind of an episode.
Yeah. And I like the variety of options that he talks about also, because I know we get in our groove here of rental real estate, right? Like short-term, long-term rentals, about house flipping, about house hacking. But Robert went into other options too, of ways that even if you don't want to own property or you don't want to roll up your sleeves and do this yourself, ways that you can still weave real estate investing into your financial plan to make that work for you based on what you need for your financial plan. So I really like that comprehensive financial planning element to still weave real estate in. And fascinating too, how real estate is in most of the portfolios that he manages. Like I think that's pretty cool.
Yeah. And I would challenge anyone that if you get to this episode, you like it, and you have somebody out there that is either on the fence about real estate or thinks real estate is the worst or just hasn't really heard about it, send them this episode, because Robert really breaks it down in a way that I think is digestible, and it's a piece of the financial plan rather than the only thing to focus on. Because again, David, you and I, we get a little too into the real estate sometimes. Yeah. Good for the podcast, but maybe not good for every pharmacist out there. So challenge you guys, if you like this episode, send it to a colleague. Maybe you can inspire them to do something different. So with that, we'll take you right to it. Hope you guys enjoy. Hey, Robert, welcome to the show.
Hey guys, how you doing today?
Great. It's awesome to have a YFP-based guest. This is exciting. We brought on our own certified financial planner to talk through all things real estate investing and financial planning and where those two things combine. So we appreciate you being here.
Happy to help in any way I can.
So why don't we kick it right off? Talk to us a little about your background and how you came to be at YFP and into the financial planning space.
Yeah. So again, Robert Lopez, certified financial planner, lead planner at YFP, and as of tomorrow, interim director of financial planning while Tim Baker is out on his sabbatical.
Very nice.
So I joined YFP just before COVID. It was February of 2020. I've been a financial planner. I ran my own firm where I worked with healthcare professionals, figuring out their finances. Before that, hit a couple of spots. I was in the military. I'm actually still in the military and the Air Force Reserves now as an explosive ordnance disposal technician. I got into finance because I just had so many friends that just didn't understand the numbers. The story I like to tell is I had a buddy who came to me one evening, was a roommate, and we're house hacking, by the way. And he came to me and he goes, can I borrow $10? And I was like, why do you need $10? And he's like, well, a large pizza from Pizza Hut is $16 and I need to make it to Friday before payday. I was like, all right, well, I'll buy the pizza. Let's have a conversation because there's bigger issues at play here. And that kind of led me down the path towards financial planning. And it's been an awesome ride so far. I love talking to people about their numbers and helping them figure out how to live their best life.
That's awesome.
Love it. I know we talk a lot here on this podcast, obviously about real estate investing, and there's several of us that fell into this either through house hacking, like you talk about, or went out and bought a rental property and thought that was kind of the best way to get in. But there's obviously plenty of different flavors of real estate investing, and I know you help walk people through several of those. So I wonder if you could just do a 30,000-foot overview of some of the different areas of real estate investing that pharmacists might find their way into as a part of their financial plan.
Yeah, I think the most common way that most of our clients end up getting into real estate investing non-directly is through REITs, or real estate investment trusts. It's a mutual fund built out of income generating properties. And we put that in almost every person's portfolio. So that's at least a 5% holding of all YFP portfolios, because we think that that's a major part of the market, but both now and in the future. So we want to make sure that's tied in. You guys had Senate on a few episodes back, and that was like syndication. So syndication is another great way. I'm actually trying to connect a client with him right now to go into syndication, where a bunch of people get together and buy a big property that's managed by a few of those members. I think that's a great way to go about it. Partnering on a deal is one of my favorite pitches to clients. If they really want to get into this game, but they're not sure where to go find a meetup. Find somebody that you can partner on a deal, right? Maybe you're the one bringing the money. Maybe you're the one with the deal. Maybe you're the one just putting sweat equity, labor, and ignorance into the project. Also a possibility. We have clients doing, hands-on stuff, right? So we're doing fix and flips, where they're buying a house, fixing it up and selling it. Don't know how much of that is going to be happening over the next year or two. Buy and holds, where they're buying a property and holding it with a rental for a long time. And then obviously everybody loves the BRRRR method, buying a property, rehabbing it, renting it, refinancing it, and repeating it. We have a client that has done that 3 times off the same initial cash flow, and it's just working out great. House hacking is obviously a good part. So if we can get in a big property with multiple rooms that we can live in one and rent out the rest of the house, or if it's a multi-unit property where we can live in one unit and rent the other 2, that can either bring your cost down or work it as an investment long-term. Love that. Mm-hmm. Combining that with some like long buy and hold. So you do that for a little bit and then you go get another property and you do it again, you get another property and you do it again, and you start from a house hacking basis. I love that. But one of the things that we see a lot of clients want to do right now is vacation rental, right? Finding that property that's going to be a cabin in the woods for their family to grow into, that they can also make some cash flow on, or finding that beachfront property that they know is in a hot area that they can also visit for the 14 days off a year they might be able to visit as a pharmacist. We're seeing that happen more and more. Rates going up, prices going up is removing a lot of that, but it's still a desire and a dream for a lot of people, and we do what we can to help them figure out how to make that achievable.
And so that leads me right to my next question, which you mentioned a lot of different clients coming at you with all these different strategies. And so how does a financial planner fit into that? I think, again, the reason we brought you on especially is because I think there's a really good call for having a financial planner involved, but we don't talk about it very much. We just talk about how to go like become a YouTube investor and like you learn this stuff from a podcast and then go out and buy a house. But like, why would a real estate investor want to get connected with a financial planner?
I think just to get that objective third-party opinion, right? When you end up in like, there's a better word for this, and I wish I had it to sound so eloquent, but when you end up with a reverberation cycle of thought where everyone is telling you that something is a great idea, sometimes you need an objective opinion to be like, wait, this is a terrible idea. Hey, you didn't take this into account. Hey, you didn't think about these other avenues of investment opportunities. So really getting someone who can have that 30,000-foot view, right? That big picture of your entire financial plan is great, right? How does this impact your goals? How is your net worth statement currently, right? How does this impact your budgeting and or your cash flow? How's your other debt management, right? You have some other goals that we'll probably talk about. Where's your retirement planning at? Are you on track? Are you off track? Is this going to be your retirement plan? And is that a good idea? How's your emergency fund set? Not from the real estate business that you're trying to create, but from your personal life. If you lose your W-2 or your 1099, what's your life going to look like? What kind of insurance coverages do we need, personal, professional, for ourselves, for our business, for our family? Estate planning and how are we going to tie this into it? Tax planning and how that's going to impact us. Employee benefits and what benefits we may have a legal benefit through our employer that's going to help us write real estate contracts, right? Education planning for your kids. Is this house your kids' education fund, which is actually a really common thing that I like to see? Or are we going to have a 529 education fund on top of this to go with it? And then maybe they'll just live in this house when they're in college and rent it out and do that. I'd love to talk about that later if we can, but that's a great path I like for clients. So there's just really objective and honest opinions with someone who knows the ins and outs of your finances, but is not emotionally tied to something like you may be.
No, I think we're hearing a lot of that, right? Like we say often that if you've watched any TV during the pandemic, you've seen 14 house flipping shows that have just come on the air. And you get on social media and people are talking about how they bought this place and this place, and like everybody's becoming a real estate investor, is becoming this hot thing. And you talk about that just reverberating sound of what people are doing right now. I feel like there's a lot of that in real estate. So are you hearing that from clients that are coming to you and saying like, yeah, I got to get into this. Like, this is a hot thing. I really want to do real estate investing. Or are pharmacists more prone to like, let's do a REIT or something that's a little less hands-on?
I think the perception from the public is tied a little bit like 8 years ago, right? We're getting those books that are still coming out of somebody saying how they bought houses in 2012 and they're killing it. And we're having shows where we're getting purchases from 4 years ago that are still being aired. And that makes it sound better than it is. But a lot of clients are coming on and saying, I know I want to retire early and this is the only way that it works, right? Everything on the internet. I watched a TikTok video of some kid in Arizona who owns 5 houses. He's retired at 23. Like, why am I not doing that? I should be doing that. So we are hearing more of that. Actually, I was telling you before we jumped on, but I had a client today, an hour and a half ago, that came into me and says, hey, can we jump on a 30-minute chat? I think I want to get into real estate investing. And no prior history, bought their first house earlier this year as a primary residence, and now they're got the bug. They're seeing other people. They know friends and family that own houses, and it works out great for them, whether it's residential or commercial. But this particular property was just a terrible idea, right? It was too high of a price range. They didn't have the cash to put the money down, so they would have had to do some gray area stuff with FHA or VA loans to pretend it's a primary residence to get a loan. That's not going to be ideal. They'd have to have full capacity at the 3 units to make it worthwhile. And then they'd be scratching a cash flow, maybe. So we're betting on appreciation in an overinflated market with a 7% interest rate on investment properties. So just having somebody who can kind of peel it back is that way. But I don't think that's going to stop anytime soon. I think people are still going to hear these ideas that can be great. And they just need a little bit of direction, right? Maybe it's, research, get out to those groups and learn from other people's mistakes. I would rather work with a client and show them the potholes coming. And that's why I really like that our client base is so similar, because I can say, hey, this is a great idea. I can show you, removing information, but 5 other clients that have gone down this path, and this is the outcomes that they've had. Is this something we still want to do? But yeah, we're seeing that more and more. I'm just interested if a year from now if we'll still see it though.
Mm-hmm.
I think we're going to hear a lot less. I think these reruns on TV are going to start to get played out.
Yeah, I definitely think that the interest rates and the appreciation is creating a very different market than we saw 2 or 3 years ago. And I like how you're approaching that, bringing in that objective evidence. But then it sounds like you're also helping people with like, well, this house may not be what you're looking for, but this is why, and this is how you might be able to find something that is what you're looking for, rather than like I hear stories of financial planners that say like, no, don't do real estate, do these things instead. But it seems like you're very open-minded to a lot of these different options.
Yeah, I think there's a lot of avenues for investing that, we're not comfortable with personally, right? But if a client is the avenue they want to go down, then we're going to do our best to educate ourselves and educate them throughout the process. So, I don't personally invest in crypto, but if a client wants to do that, then we're going to figure out the best way and most efficient way to manage that. If a client wants to go down triple net leases that I know nothing about, like, let's figure it out together. Let's find an expert and we'll learn about it and take that education and move on. So for this particular client I was mentioning, California is probably not going to work out for them. So maybe let's talk about turnkey properties in Oklahoma, right? You want to put that cash to work. Let's find another avenue that's going to better suit your personal financial situation and the goals that they've set for themselves going forward, so we can tie all that together. And that's really what financial planning is, right? It's the planning process that just takes all these variables into play and finds the most optimal solution for them in the moment right now.
See, I think that's huge. And I think it's interesting because, and this is, again, why I love YFP planning so much. And I'm fully biased, right, being on this podcast. But truthfully, from someone who has had an experience with a past financial planner. And I remember to the day, Kristen and I, we were sitting down with them and I said, guys, I'm interested in thinking about buying investment property. And he goes, oh, no, you don't want to do that. You just want to stick your money in this market fund and we'll manage it and it'll be fine. And I said, well, why? Like, why do you have that reaction? He's like, oh, I've got like 40 rentals and it's a big pain in the butt. And I'm like, well, hold on. You have 40 and it immediately just was being pushed toward ignoring what I wanted to do and following what made them the most money. And we fired them within a month of that conversation. And so knowing that you've got someone out there like yourself that can say, if this is part of your plan, let's figure out a way to make it work, rather than, no, you've got to follow our direction or else it's, we're not a good fit. So I think that's super important. It's something I don't want to overlook because there's a lot of bad financial planners out there, and it's important to find a good one. So if someone does have that conversation, they come to you, Robert, and they say, Robert, I'm interested in real estate investing, just like this client did this today, right? How does the rest of that conversation go? What does it look like in terms of getting them access to some of those resources?
Yeah. So if a client came to me and they already had a property in mind, the first thing we would say is like, is this a good deal? Right? Let's talk about that. Let's run through some numbers, right? We don't create our own proprietary stuff. There's too much information on the internet for me to recreate that wheel. So go on the internet, find a calculator and say, is this a good deal? Okay, cool. You're going to get like a 2 cap on this and you're going to be negative 700 a month. Like, okay, just pass. Wait for a better deal, educate yourself, do some mock deals. Beyond that, if they just say, I want to get into real estate investing, treat it like any other type of investing. Is this a good deal for them, right? Is this a good idea? Are there other things in their life that are on fire, right? Do we have a student loan problem that's about to hit the fan? Do we have no life insurance to take care of us? Do we have no cash flow because we just got laid off and we're thinking this is going to solve our solutions, and that's just not how numbers work. There's too many fixes in that place. But do we have a debt plan in order? How's our cash flow? Are we in a solid position? And then I always tie this back to goals. Everything ties back to goals. But does this fit in with their goals? If they want to go travel abroad and they're getting a property that they're going to manage themselves, how do those tie together? Are you going to be your own property manager long term, or are you going to have a property manager on salary? Do you want to be able to live in your hometown forever? And this is a turnkey property in Seattle. Terrible example. Seattle, not doing any turnkeys, but somewhere else. Really, just how does this all tie in? And then we can work way through that. So it's really a really emotional decision to want to get into some new investment that you heard about. So let's calm down. Let's get a lay of the land. Let's figure out, are we in a position to make a big move? And then let's educate ourselves through that process. And that's all we really care about is, making sure the client's getting what they want to do and not putting themselves in harm's way to get there.
I love that. That's great.
Yeah, I mean, there's definitely a lot of opportunity in real estate investing to get hurt because, like you said, it is a bigger investment, and so that kind of double check, bringing in the logic to peel back from a purely emotional standpoint, I think that's absolutely huge, especially considering that it is such a big investment. Depending on market and all those kind of things, I'm sure that you see people that are like, well, I'm not ready today, but I'm thinking about real estate. I'd like to make a move in the next 3, 4, 5 years, something like that. What are the things that you tell that kind of client to start preparing for, start thinking about when real estate is on the kind of mid horizon?
Yeah, that's a really common conversation that we have. Is really that if they're not even aware of real estate, a lot of times we'll bring it up to them. Is it something that you want to look at in the future? But really determining if it's for you. Right? If the idea of real estate is for you, then we can move forward. If not, stick with REITs, right? Real estate investment trust gives you that same kind of exposure to a lot of the same types of ideas without that old adage of, cleaning a toilet at 2 a.m. that you hear all the time, but never changed a toilet any of my properties. But if it is your idea, kind of what can we do? Well, let's make sure we have a plan for consumer debt, right? Let's get our house in order again, right? Emergency funds in line, review traditional investment strategies. And when I say that, it means, how are we going to save for this goal, right? There's a lot of cash coming on that. So we got to review what kind of options we have. Let's educate ourselves as much as possible. Okay. You need to be a sponge with real estate. It's an entire different industry and business that you know nothing about, because why would you? You didn't learn about this in school. You didn't learn about contracts in school. So save. We can save in a bank account if we think it's going to be really short term, or we can save in an investment account. A lot of times right now you hear about like treasury bonds because they're getting really good rates on the middle term. And it's really figuring out that timeline. With investing, it all comes down to, what does your actual timeline look like? And is it flexible? Because if your timeline is not flexible, then you can't be risky. I can't put money into the market and then have it go down and then still need to take that money out when it's not going to be there anymore, right? Mm-hmm. If I'm flexible with my time frame, then I can say, hey, let's put this money to work. If it's there 3 to 5 years, good. If it's not, then we'll wait for it to come back. Or if it's there 2 years and it's gone up, then let's be more aggressive with the target. If we're something that's more like, I want to wait till juniors in school before we start this, or I want to wait till kids are out of school to start this, then we have a more structured timeline, and we can say, hey, let's get the right, bond ladder in place so we can time this out, or let's get the right allocation between stocks and bonds to time it as we approach that deadline. And then determine what kind of niche strategy you want to have. you're a financial pharmacist, right? We niche down all the way to pharmacists, which is super tight relative to our industry. So find your strategy. Do they want to do buy and holds for elderly population, Section 8 housing, fraternities? Do they want to rent to only people with large animals? I love that niche for people with rental properties because that's people are never leaving. Do they want to do apartment complexes? Do they want to grow and they eventually want to become a syndication themselves? Figure that out so you can learn from those pros. Start to develop your network, right? You're going to have a special kind of agent, okay? You're not getting just some agent off the block. You're going to talk to Nate. Nate's going to hook you up and you're going to be good to go, right? You're going to find a broker or a local bank that you're going to want to work with. And you're going to have that in place. You're going to find contractors and handymans for your area so they can do the fix and flips for you, or they can do the stuff when you're out of town, right? You're going to build those networks out in estate attorney and real estate attorneys. So that way you're ready to then jump in and just start going at it, whether it's through mock deals, which I would love people to do more often of, or it's through actually running through the process of purchasing, building strong parameters for yourself with you and your financial, whoever you're working with, and setting those limits on your agents and your brokers and your contractors and your attorneys to let them know, this is what I'm trying to do. Put it in the universe and the universe will give back to you eventually.
What about those clients that come to you and say, I'm interested in real estate investing, Robert, but my spouse is not, or, this was her idea and I don't think it's a good idea at all. Like, how does that conversation go? Because I know other people we've talked to, one spouse is on board, other one's not. And that can be a difficult conversation. So do you play marital counselor with them?
We definitely do. My wife is a clinical psychologist, so she's a therapist by trade. So I guess I pick up enough of this.
There you go.
But everything we do is, financial therapy. So working through some of these conversations is really important. I'm not here to tell somebody what they have to do. Okay. Even as a financial planner, I'm a guide post. Okay. I'm here to help them figure out how to do what they want to do already. So I don't want to convince anyone to do anything, but I think that if you were going to, you really need that buy-in. So exposing them to the world is the most important thing, right? Taking them to meetup groups with you so they can meet these other professionals. So it's not just you pitching them all these ideas. They're hearing it from other people that maybe they know or they trust. Have open conversations with your friends and family, because Uncle Bob might own 5 real estate properties that nobody talks about because nobody talks to Uncle Bob, right? Aunt Mary has a triple net lease property that she got from her father back in the day, and she's been running it and she's making buku bucks. Who knows what's out there? So we're really getting them out there. Going over those mock deals with your family and with your significant other is really important so they can see how the numbers can work and they can see how the numbers can go bad. Right? Both of you having a true objective opinion of the situation is really important. And then just more and more conversations, right? There is also a time where they may just say, I'm not into this idea. And then you got to decide, are you willing to, fight over this, fight for this, or take it separate, right? Not everybody's finances are 100% all together. Some people have split money. So is this something you want to split out? Or is this something that they're just comfortable with you running with into the future? That's also a possibility. So buy-in is very important. It's not the end of all, but it is something you wanted to agree when you're working with joint finance.
Yeah, I really like you brought up mock deals a couple times, and I'd love to go further on that because I think it's such a good strategy for learning how to work through a property, learning to identify property that would be one to jump on, one that would be one to steer very clear from. So can you talk a little bit more about mock deals and how you would point someone in that direction?
Yeah, I treat mock deals the same way as I would treat somebody that really wants to go out and do their own stock investing, right? We believe in a very boring nature, right? So we're going to do ETFs and mutual funds and just give me the full diversified exposure of the market. If someone wants to go out and pick stocks, there's mock trades you can make. You can do TD Ameritrade, who we use as our custodian. You can use Thinkorswim to go out there and pick stocks present or historically and learn from your mistakes that way. You can do the same thing with property. Go on Zillow, or if you have the MLS, go on the MLS. Find a property, run through the numbers from tooth to nail, and really figure out what the ins and outs of this were. What would you actually pay for this property? And then follow through the deal and see what actually went for, or work with your agent to see what actually went for. Run through the vacancies of properties and see what you would actually have to have, right? Okay, cool. I think I need to have a 5% vacancy rate, or I think I'm going to write a 2-year lease. Is a 2-year lease even common in your area? Run through all the maintenance and the properties. If you know other people in your real estate meetup group, because you're definitely going to be going to those, follow along their deals and see, oh man, I definitely wouldn't have bought this property, but see how it worked out for them. Maybe they had a different lineup on the construction costs, so they spent way less than you thought they were going to spend. Maybe they spent way more than you thought you were going to spend. You thought it was going to be a phenomenal deal that you missed out on. Turns out it was a great deal because the foundation is sinking or settling, I think is the magical term. I don't have a end all be all kind of mock tool. But again, the internet is abundant with resources. Find the ones you trust. We go to Bigger Pockets for almost everything, because why not go to the big guy in the room and take those lines and just flush it out. You'll know if it's a bad deal. And then you run through enough bad deals, you'll start to see the diamond in the rough poking out. So that way, when you're finally ready to make your investment, you know that you've looked at 100 properties already.
No, that's such good advice, because particularly in this market, when a deal comes up, like they go right away. Yeah. So having prepared that and having walked through 100 deals and being able to recognize when it's a really good one, I think that's a fantastic tip. As far as competing interests, then also, because for the folks that are thinking about, well, I really want to get my student loans paid off first, or I'm trying to balance this, that, and the other thing, there may be some time there, but how do you help someone factor through all those decisions about, like, well, I have this other debt, or I have student loan debt, or maybe I have this big expense coming up that I know is coming, or gosh, should I back off my 401k contributions and go into real estate? Or like, how do you help people factor through all those kind of complex decisions with real estate also?
It all comes back to goals and life planning. There is another podcast I'll pitch, the Paula Pant Afford Anything podcast. And her tagline is, I can help you afford anything, but I can't help you afford everything. There's an opportunity cost to every decision that you make. If this real estate is your end all goal, then we need to work around those other goals. Okay, maybe we stretch the student loans out longer so we can have a lower cash flow and we can actually make this work. Maybe we delay that major life planning event, whether it's a kid or a career change, or probably not a marriage, but some other kind of goal. If it's retirement savings, maybe we pull back for a little while to save up some cash flow, knowing that we have a 30-year time frame. If we're 10 years out from retirement, that's not an opportunity cost that we can give up. So you really have to tie everything into your goals and figure that out. If your goal is FIRE and financial independent, retire early, and maybe you're going the frugal route and you're going to spend $20,000 a year to do it, or you're going to go the flush route where you're making $200,000 a year in passive income, how does this work into that plan? That's all really what it breaks down to. If this goal helps you achieve your other goals, then let's figure it out. If this hinders you from achieving your other goals, let's decide if it's worth it. If it is, let's figure it out. If it's not, move on and find another avenue where you can still scratch that itch. Because that's really what it is. It's not so much of this is the only way to make money and this is the only way for your finances to work, and real estate is the only opportunity you're going to have to be successful in life. There are other opportunities. We just need to find the one that actually solves for your specific situation.
Robert, I really like that. And I think, again, just if someone's out there listening to this and resonating with all the stuff that you're putting down in terms of how you structure your advice and your guidance, what's a great way for them to connect with someone like yourself or the rest of the YFP planning team then?
Yeah, so YFP Planning, Your Financial Pharmacist Planning, we have a wonderful resource named Justin Woods, who will have every conversation with a prospective kind of new client. You can find Justin by going to yourfinancialpharmacist.com, and there's a button right on the homepage that specifically states book a free financial planning discovery call. You can also go to yfpplanning.com. The exact same button exists. You'll talk to Justin. Justin will figure out if you're actually a fit. Right? We like to work with as many people as we can, but some people it's not a good fit for them or for us. So Justin kind of helps weed that out of, maybe the comprehensive nature of our planning is not going to be for everyone. So maybe you're not a good fit, and he can point them in a better direction. And if they are going to be a good fit, he can decide who you may resonate with the best. Although I'm being quite calm on this conversation today, I am more brash in the real world, which is not going to flush with everyone. So we have other team members. We have 5 other CFPs possible to team up with. So.
That's great, Robert. And I'll throw one more resource out there too. If you are thinking, look, I need a little bit more of this guidance, like Robert's describing, and I like the YFP mindset, but maybe financial planning isn't it, or I'm already with a financial planner, then I also encourage people to check out yourfinancialpharmacist.com/none-to-one. That's the coaching program that David and I have. We've got a wait list out there right now. You can join that and get in the know for when we are going to be launching our next round of the course. So again, if you're anywhere in the spectrum, Your Financial Pharmacist is the place to be. We'd love to help you guys out with that. There's lots of different resources. So Robert, anything to take us out with, or any final thoughts on real estate investing?
No, I just hope everybody is enjoying their time. I hope you're driving safe while you're listening to this podcast, because that's when I hear these. Enjoy this summer, and I hope good deals are in the future for everyone.
Thanks for joining us, Robert. Really appreciate it.
Thanks so much.
Thanks for listening to the YFP Real Estate Investing Podcast. If you like what you heard on today's show, please leave us a review and subscribe to the show so you never miss an episode. If you have a question, know someone that would make a good guest, or want to connect with Nate or David, head on over to yfprealestate.com and join the growing YFP Real Estate Investing Facebook group. As we conclude this week's episode of the YFP Real Estate Investing Podcast, an important reminder that the content in this podcast is provided to you for your informational purposes only and is not intended to provide and should not be relied on for investment or any other advice. Information in the podcast and corresponding materials should not be construed as a solicitation or offer to buy or sell any investment or related financial products. We urge listeners to consult with a financial advisor with respect to any investment. Furthermore, the information contained in our archived newsletters, blog posts, and podcasts is not updated and may not be accurate at the time you listen to it on this podcast. Opinions and analyses expressed herein are solely those of your financial pharmacist, unless otherwise noted, and constitute judgments as of the dates published. Such information may contain forward-looking statements which are not intended to be guarantees of future events. Actual results could differ materially from those anticipated in the forward-looking statements. For more information, please visit yourfinancialpharmacist.com/disclaimer. Thank you for your support of the YFP Real Estate Investing Podcast. Have a great rest of your week.